IVM.
The CRED store has me hooked. Specially curated products from over 250 brands and the use of CRED coins to avail exclusive offers and deals across categories like food and beverages, electronics or home decor, etc. That means if you're buying electronics or home decor, it's a discount city. So don't miss out. Download the CRED app now. Folks, welcome to Paisa Vaisa presented by CRED, the most rewarding credit card bill payments app and powered by Quartr. I'm your host Anupam Gupta, B50 on Twitter, and my guest today is Ankit Mehra, CEO, founder, GyanDhan. And today we're going to talk about education loans right after this CRED convenience break, and we'll be right back on the other side. Security on a computer is like a layered cake. No matter how secure each layer may be, attackers and hackers will work tirelessly to find a vulnerability and exploit it. These cyber attacks can sneak into a system unnoticed, eventually gaining access to all the programs and files on a computer stack. Luckily, with the Intel vPro platform, all of this is avoidable. Intel vPro has the Intel Hardware Shield, which adds protection to every layer of the computer system with 3 groups of security capabilities. Advanced Threat Protection, which helps quickly detect and remediate the latest ransomware and crypto mining attacks on the system. Below the OS Security, which helps identify unauthorized changes to hardware and firmware. And Application and Data Protection, which helps prevent memory corruption and malware injection. So, secure your organization's productivity with hardware-based security only with Intel vPro. Visit www.intel.in/itheroes to know more. Intel vPro, built for business. Thank you so much for doing this for our listeners. A quick 2-line intro to what GyanDhan does, and then let's start with the question. All yours.
Thanks, Anupam, for having me on the show. GyanDhan is an education financing marketplace. At GyanDhan, our aim is to equalize and expand access to higher education. What we want to do is to ensure that there is a platform where students can realize their dreams of higher education.
Fantastic. And who doesn't want to do that? We know that there is a problem of higher education in India. Ankit, I was reading one of your articles where you've said that only 28% of the population in the 18 to 23 age group is enrolled in higher education. It's actually a pretty depressing statistic. So, walk us through this, explain the data point. I'm assuming this is postgrad, or undergrad, or master's. I don't know. First, just delve on the data point first, and using that, explain the problem.
Sure. So this is typically what is called the gross enrollment ratio. This is what typically you will have the development agencies or countries benchmarking themselves against. Specifically to India, so and just from a context standpoint, we are at 28%, 27, 28%. Developed countries would be closer to 70, 75, even 85, even 85, 90% metrics. So there is a huge gap. Now there are a bunch of issues with this. The first issue is actually is this even a right metric for India or not? So it might be sensationalizing the 28% thing, but underlying factor is the way it's calculated is how many people are enrolled in this age group divided by the total number of people in this age group. Now the big issue with this is if you don't have a lot of people who are even eligible to enter the higher education segment, then this population will always be low, or this percentage will always be low. So what I mean by that is you don't have a lot of people who are graduating out of secondary education or who are meeting the criteria to get into the higher education realm. That's why your denominator is the total population, but the eligible population is actually just a subsegment of it. So there is another metric which has been used these days, or which is being touted to show the better picture, which would be the eligible employment ratio or something like that, in which India is at close to 65%, 63%. But even there, if we compare it to China at 69%, Brazil at 75%, and US at close to 90%, and Germany at 85%, there is still a long way to go. So I think the first problem I've already indicated is really to do with the basic education system itself, right up until you even reach higher education. And then the rest of the gap, significant gap really is all down to, one could be lack of quality education in the country. And the other is definitely a piece of, at the end of the day, I need financing to access that education. I mean, I might be the brightest kid in the class, but if I don't have the right means to pay for my education, I'll have to stop at some point in time to earn my livelihood, sustain my family or something like that.
Yeah.
And we need to have that ecosystem that encourages people to get out of that socioeconomic strata by achieving better outcomes.
Yeah, I mean, I think this question itself could go into a separate episode. But if I've understood you right, what you're saying is that if 100 18-year-olds, who are going from high school to college, if
Yeah.
there are, if the sample size is 100, only 28 actually manage to reach there. Now that 28 could also be low because they've not got enough marks to move to undergrad, irrespective of whether they have the money or not. That is a separate problem, right? Now that probably speaks to the quality of your high school that you're not able to go to this. So I hope I've understood that right. Just to clarify to our listeners.
Yes. So simple is 100 students, 100 individuals in that age segment. Probably only 50 are eligible to even get into higher education, and of that, 28 actually end up getting a.
Amazing. The sheer amount of people who are left behind. These are 18-year-olds in the prime of going to be in the prime of their youth very soon. Anyway, so coming back now to GyanDhan, I want to talk about foreign education now. India education, we are done. Now, for a very elite set of Indians, okay, which could be a very small base, I don't know. An undergrad in the US for their children is a very real aspiration. Maybe I belong to a generation where this was not even thinkable. People would go for their masters. Masters, I guess, even now, I'm sure that you will confirm the numbers. I think value-wise, masters is still where the market is. I'm sure you'd also agree that in the last, let's say, decade, I mean, the RBI data itself shows that undergrad has also become a very big source of forex outgo. So I want to get some numbers here from you, and maybe you can compare to us both the pieces of the foreign education market out here, undergrad as well as postgrad. Okay, what are the fees we are talking about here in both the segments? Okay, and we know that getting an admission itself is very difficult. Okay, whether it's in a very good college or a very good MBA in the US is extremely difficult. But let's say that you're among those guys who've actually got it. Your next big thing is the fees. So walk us through the problems here. One, give us an idea of the average or median fees for undergrad and MBA. And in your view, what specifically are the problems? Maybe it's access to money or whatever it is. Let's talk a bit about that.
Sure. So you are very right that undergrad has emerged as one of the fastest growing segments in the study abroad segment. At a high level, what we've seen is, if we specifically look at the US market, and that percentage will replicate across the globe as well. What we see is almost still till to date, roughly 70% of the folks go for masters, and masters in STEM programs. It's the, whether it be MBA or whether it be undergrad, that comprises the remaining 30%. But yes, what's happened is that as we have grown as an economy, that yearning for a better education, better access to quality education has meant that undergrad is definitely increasing rapidly. Now, quickly coming to the price points that you mentioned. So I think if I have to very broadly break it down into undergrad, masters, and then MBA, because that's how I would want to look at this entire worldview of things. Masters typically is the cheapest of the three. There you will have your total cost of education. And when I say total cost of education, that is living plus tuition plus every other expense included. That would range at the lowest end, it's as low as 15 lakhs or so. At the high end, it might go up to 1 crore or so. But that's the range, and the median would be somewhere around what we typically see in our students is the loan request is close to 25 lakhs in the MS master segment, and the total cost of education is close to 40 lakhs. So that's the typical size. In MBA, it's really skewed by what kind of schools are you going to. If you're talking about the elite schools, really the total cost of education turns out to be a couple of crores, 1.7 crores or 1.6, 1.7 crores. And it's the same case in the undergrad space as well. So undergrad is a 4-year program, but still the total cost of education, when you talk about it, it closes in at close to 2 crores.
So you're talking about $300, 300,000, right?
Roughly speaking, that would be the total cost of education.
Oh boy.
Now, obviously, there will be places where someone will get a scholarship, so the total cost might come down. But when we talk about the sticker price, it will be closer to the sticker.
Just one clarification. When you say masters, this is you're talking of someone who does his engineering undergrad from India, say from an IIT, and goes to do his masters in the US, right? And
Yes.
what are the degrees that you're talking about out here, which you call masters?
So
You say
it's
MTechs.
so it's basically MS. This could,
MS.
this could be MS. This could be MIMs these days.
Uh,
MIS kind of a programs. So the idea really is, yes, as you said, someone who has done an undergrad in India, maybe work for a couple of years or directly going to go for their masters, and that would be the.
I'm a chartered accountant, man. Back in my day, we used to. The Y2K was happening, and a lot of my friends who went into do the. I mean, in my time, you had to become an engineer. Anyway, let me not go into my story. Now, let's talk about how both these markets, on the loan side, on the finance side, the education loan industry, okay, which I believe has NPAs of as high as 10%, okay, which I think is spectacularly high.
Yes.
What are the issues here? Why are these NPAs high? Where all, in your opinion, is the system broken that prevents very bright talent here in India? And we know that we've got some very hardworking, very studious, very talented kids from not getting the education that they deserve.
So this would actually require a lot of a really long
No, take your
exercise
time. Take your time. Take your time.
trying
We
to
have
figure it
enough
out. But
time. Take your time.
but yeah, I think so. You're right that the NPAs in the education loan segment is close to 10%. There are banks where the NPAs are even higher than this. They're probably closer to 20% or so. And education loan as a segment definitely is not viewed as a very good segment. And that is the challenge. That is the challenge really we wanted to kind of problem we wanted to solve. That hey, it's not really a case that the asset class is wrong. It's probably the way we are addressing that it is wrong. And there are multiple pieces to it which have resulted in this. So I think I'll go back to the education policy that we had that the government had formulated in the early 2000s and so on. And actually, even going before that, back before that, in the late 80s, 90s. So when I talked to bankers, veteran bankers, in terms of what was the issue in the late 80s, 90s, at that point in time, definitely the cost of education was not that high. So there was not necessarily that huge a need. But even there, then the idea was whatever limited amount of loans that were being done, there was no tracking of loans. So the idea was we didn't have really credit bureaus back then as developed, and we didn't really have good reporting. So what ended up happening was I could take a loan and then I could just go off the radar. And there was no way to kind of catch me. And so what ends up for a bank is it becomes a NPA. And once you have been hit by an NPA wave, you'll probably be skeptic of getting into the market again. So that was the entire 80s, 90s era. Then we had the education loan policies that came up in the early 2000s, which talked about, hey, we need to provide access to education to folks. And it talked about, hey, the Indian Bank Association will have a model education loan policy whereby loans up to 4 lakhs can be taken without a co-applicant, without a collateral. And then loans up to 7.5 lakhs don't require a collateral, and so on and so forth. So this was a very, I think the idea was very good. It was a noble thought process that, I mean, why should someone have to provide a collateral and so on and so forth. I think the issue probably ended up in terms of intent versus execution in my mind, wherein what ended up happening was you had this entire mushrooming of colleges. I would say that, for lack of a better word, they were just there for the purpose of issuing these entry into this XYZ college, wherein there is no quality education. So your outcome of the product is not really good. And so and for an incoming student, he's just going in with the hope, or he or she is going with the hope of, hey, I'll get a BTech degree or some MBA degree, and that will open new avenues in life. But really, the quality of education is not at par. And the challenge is you're getting an easy loan to get into that institute. So at the end, and the institute is not on the hook. And the beauty of credit is it doesn't blow up instantly. It takes time. When it blows up massively, which is what we have seen is you had this entire I would say, low quality institutes getting funding for students, and students not getting jobs that would allow them to pay for their loans back. And so that entire cycle worked really badly for a few years. And to be honest, it even continues till this day in some form or fashion, which results in what happens is some banks will uh, pull back. They will not necessarily, one is they will not advertise the product. The other is they will make it cumbersome for an average student to walk into a bank. They will say, hey, I mean, I don't want to be obviously get into the media limelight or kind of get a negative publicity, but how can we really make it as difficult as possible for someone to come to? Like, I mean, realistically, banks would be there are banks who would be much happier if you walk into that branch. They'll say, please go to the next bank. I'm willing to lose this business.
Wow.
Right. So I think that is a fact, and I don't think the banks are also to be blamed for it, because, as I said, it's really down to policy. That the policy actually talks about a there is a clause in the policy which talks about employability. How do you assess employability? But that's where probably banks haven't really gotten their act together. So what's really happened is you don't really know what is employable or what will stand the scrutiny in a court of law, and
Sure.
you default to places wherein you'll just end up doing loans or you'll completely not do loans. And even when we dissect this 10% NPA problem, what has been typically been the case is your less than 4 lakh segment is the most toxic class. Again, goes to the whole NPA and the quality of education issue. What we have seen in the last few years is banks are also now responding and saying, hey, there are different segments where we could probably expand, which is why you've started seeing education studies abroad emerging as a segment when some banks or NBFCs are increasingly looking at it and saying, hey, it's not necessarily a bad asset class. It's just we need to find the right segments and go after the right segments. And more importantly, understand the customer needs and structure the product accordingly. So I think I'll give you a very quick example, which is not related to the NPA, but really talks about, at the end of the day, NPA is all about numerator versus denominator. You can increase your denominator by going after the right asset classes. So in previous years, what used to happen is if you are getting an admission from a US university, you will get what is called an I-20, which talks about the cost of education and so on and so forth. You have to present that to the visa office, to the visas, to the consulates to get your visa.
Get the visa, yeah.
To get the visa. Now, what ends up happening is that I-20 is basically a proof that you can fund your education. But what would happen is if you would go to a bank, they would have said that, hey, give me your I-20 before I can give you a loan offer. But that is the basic problem. I need a loan sanction to be able to prove that hey, I can fund my education. So this chicken and egg problem was there for a long time. NBFCs came in. CRED was one of the first players that solved this thing. It's a very small issue, but just the sheer bureaucracy involved meant that this was not being addressed at all. So I think there are genuine, tangible problems on the quality of education at one end. There are issues around tracking of students, around the credit reporting, and so on and so forth, which are again byproducts and will continue. Those have been addressed to a large extent, but they'll continue for some more time. And then the last bit is really picking your pockets, really going back to define what employability is. A 2 lakh course might actually be costlier than a 20 lakh course.
Amazing, yeah. Ankit, because when I look at fintech startups, and I've been very lucky to get a lot of them on my podcast. So far, I've had, I think Avance has been Eduvance has been a guest on Paisa Vaisa. I know that Avance is also a fairly large player in this market. And if I recall correctly, they're backed by a fairly large private equity firm. So there's Avance, there is Eduvance, there is GyanDhan, there's CRED. I'm talking about fintech startups only out here. I'm talking about startups outside the system of banks and NBFCs who obviously have much larger balance sheets and who have a bigger, they have a different set of rules to play by. This sector has been left by VCs and private equities, right? In India, they don't want to touch this. They're like, lending karo, go for lending, go for investing. That's why by lending, obviously, I mean small tickets loans or unsecured loans or buy now, pay later types. VCs don't like this business. Am I right in assuming that, or is there something else out here?
So I think I wouldn't say VCs have completely left this business. I think it's really a case of finding the right investors, to be honest, and also a case of there are different sets of investors for different sets of markets. So at a very high level, I can say that at the end of the day, when we talk about this education loans, let's say for study abroad or for domestic, which are longer tenor loans, those are typically loans which would be, because they are longer tenor, they are 6, 7, 8, 10 years. So they are more, I would say, PE kind of businesses. Or even ideally speaking, they are more like a mortgage business or a pension fund kind of a business, investor business. Right. So I think the target customer segment is probably a bit different, because at the end of the day, if I have a competing argument of going after SME short term, if I'm going after it, there's nothing wrong with it, to be honest, right? In India, there is a credit opportunity almost everywhere. Right. So, but yes, I think, and we have seen that, as you mentioned, Avance and CRED are two big NBFCs in this space. They are the legacy NBFCs in this space. And Avance has backed by Warburg Pincus. CRED obviously is the HDFC subsidiary. So they are backed by really big players, and who've shown that there is need. There is actually business to be made in this segment. Now, coming to all the fintechs in this space, I think a large chunk of fintechs in this space have really pivoted towards the buy now, pay later model, or kind of identified segments where they would address the buy now, pay later. And that really goes back to the point of maybe it might make sense to approach a VC for funding and stuff for a buy now, pay later product, rather than saying, hey, I'm willing to build this thesis out for over the next 5 years, and then I'll build a huge business on top of that. So I think that is the choice some of the startups have taken. When we started out, for us, it was always a question of answering what is the key valuable product. So I think it's always been a case of, hey, we could offer 10 different other products, but really the fundamental product that needs to be addressed is this education. Now, whether it be in its domestic market, whether it be study abroad, this funding my total education is the primary product. I could have other ancillary products around it, but this needs to be solved. Now, whether it be through VCs, whether it be through PEs, whether it be through partnering with the existing players, that's something we felt that's a problem we have to solve for.
Yeah, because it's a tough business. Anyway, so folks, we're going to take a small break out here. I know this industry part of the episode might have become a little bit heavy for you guys, but then, this is such a unique industry, number one. Number two, I don't get people from the education loan industry on Paisa Vaisa, so I'm going to obviously take all this, all the insight that Ankit has to offer, and, hopefully you guys have got some insights from whatever Ankit has spoken. So don't go anywhere, folks. We'll be right back, because we are going to be talking about GyanDhan, what it does, what their main products are. Who knows? Some of you guys might be looking out for an education loan, and GyanDhan might be the right guys for that. So on that note, it's time to take the CRED convenience break. We'll be right back on the other side.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With CoinSwitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes CoinSwitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download CoinSwitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into A Show About Crypto with me, Rohan Joshi, my new adventure on IVM Podcasts. CoinSwitch, kuch to badlega.
Folks, we have a listener's question.
Hello, Anupam. I miss listening to the conference call of a company that I track. Where can I listen to the recording?
Okay, that happens to a lot of us, because come on, quarterly results happen 4 times in a year, and they get bunched up together, and there's a very good chance that you will miss out on listening to one conference call or 2 conference calls. And where do you go for that, right? I mean, you want to listen to the entire playback of the conference call, and probably you want the transcript also of the conference call? Well, there you go. You've got the Quartr app. That's Quartr. And on the Quartr app, you can create a list of your favorite companies. And wherever the company releases, right, the transcript and the recording of the conference call, the Quartr app will have that. Just open the app, check out your company, and it will show there, right? Q1, Q2, Q3, Q4. And you can listen to the entire recording of the conference call, of course, with pause, rewind, stuff like that. And wherever it's available, you'll even get the transcript of the conference call. So, folks, that is a Quartr app, Quartr. Okay, folks, welcome back to Paisa Vaisa. My guest is Ankit Mehra, CEO, founder, GyanDhan. On the first part of this episode, we spoke in depth about the education loan industry, about education also, domestic education, foreign education loans, and all that stuff. Now, in this part, we're going to talk about GyanDhan in specific. Ankit, you've got a very interesting concept. Now, just walk us through the idea of a GyanDhan score. Okay, now we know what a credit score is. I mean, it's a pretty critical aspect in getting a loan. What is a GyanDhan score? What is the thinking behind this? How does this work?
Sure. So I'll take back to pretty much how GyanDhan started. So this was back in 2013. I had left Capital One, moved to Spain to pursue my business school studies at ESA Business School. And what I realized when I got the admission was there were a lot of colleagues of mine who were from India who were struggling to pay for their education. Because so this was a time when Europe was still reeling under the effect of the recession. And the local banks that had promised loans for admission students admitted into the business school had went back on their arrangements. So you suddenly had a lot of students. And I was sitting there with my Capital One experience trying to think that, hey, a person X with such and such background will probably get a great job after they complete their MBA. So I was sitting there thinking, hey, I'll probably want to bet on this person. Similarly, I was probably trying to build a mental model in my mind saying, hey, this person might not get the best of jobs. They are probably in the top 10 B school, but I'm not really sure if I want to take the same bet on that. So it really was a case of, hey, why can't we have some kind of a risk-based pricing which takes into account what the future employment prospects of a student look. And while this was just an idea and then it just started gaining momentum, and eventually in 2015, I moved back to India to start GyanDhan, and Jainesh, my co-founder, moved back from US to join me in this journey. Really, the idea was, at the end of the day, if we are giving a credit to a person, there are two aspects to it. One is ability to repay, and one is the willingness to repay. Now, the willingness to repay is by some form of fashion, a credit score can give an idea about. But what about the ability to repay? So typically what we do as an ability to repay is we'll look at, hey, do you have a collateral? What does your father earn? Or what does your mother earn? What is your basically co-applicant's income like? Right. And the idea was, hey, why can't we understand the student's employability at the end of it? And really what that triggered was, can we predict someone's employability? So what kind of a job will they get? What is the probability that they will get a job? And what kind of a salary range will they fall into after they complete their degree? So that was the challenge for us. And we spent the first 1 year before even kind of having deep discussions with banks and kind of launching our product, just building out the first basic version of the GyanDhan score, which is effectively predicting your employability. Because the idea was, can it really be built by using some variables which actually are statistically valid? And so that is where we spent a lot of time saying, hey, looking at your academic background, looking at your professional background, looking at other parameters of your profile, can I really predict what kind of a salary you will? And then using that, can I then create new products which will say, hey, I'll still consider the collateral you bring, the co-applicant you bring, but even if you don't have that, I'm willing to take a bet on your future. So that was the whole essence behind GyanDhan score. So our first version, we just built it for a very small subsegment of 30 schools in the US, coming from some 30 odd Indian schools. At this point in time, we cover pretty much the entire US market and parts of the Canadian and the Australian markets.
Tell us how it works, no? I mean, for someone who's listening to this episode right now and has absolutely no idea what it is, he'll obviously go to your website and find out more, but tell us how it works.
Sure. So intuitively speaking, I'll just give you intuitive examples. So the idea is, let's take two students going to Harvard. Now the thing is, does the student who is enrolled in a computer science education program versus a student who is enrolled in a, let's say, aeronautical program or American history, psychology, right? Do they have the same employability? Will they have the same odds of getting a job? That's one aspect. So that's telling you kind of what is one variable in the model. Similarly, now let's talk about only computer science, right? Student going to Harvard versus student going to George Mason University. There might be a difference, right? Now, let's even change that. Two students going to Harvard computer science. Okay, what about their undergrad? Right, someone coming from, let's say, a computer science background versus someone coming from a mechanical background. Does that make a difference? What kind of schools did they come from? Do they have a professional experience before that? And if they had a professional experience, and here I'm going to some kind of an MBA. So how MBA schools do the admissions? They look at your profile, they look at your growth, right? They try to understand who are the rock stars, right? Because the rock stars are the one who's going to get a great job or who are going to start something of their own. And so really, it's just taking those same parameters and trying to assess, does that statistically hold true in the future?
So how does the score? It's a numerical score or what? I mean, from zero to something.
So it basically it's a so first I'll just talk about the statistical part of it. It's basically a logistic regression model with a random forest implementation. So there are a couple of models running in the background. What ends up happening is it gives us a score of between 0 to 100, which says what is the probability that you will get a job. So 100 means that there is a certainty you will get a job, right? Obviously, no one will get 100, but the idea is the closer you are to that metric, the better my thing is. And then there is a separate model which will also say what kind of a salary range can I expect for this individual.
Okay.
Right, because again, in addition to the probability, there is also the aspect of two people at the same probabilities might have different salary expectations in the market.
So I'm guessing that if I want to go to the New York Film Academy to learn acting, I'm not going to have a very high score there, will I? Or is that a reasonable assumption?
Right. So again, obviously, if you compare it to, let's say, computer science, Harvard, computer science at MIT, it will definitely be lower, right? But the idea really there is not to say that, hey, this employability is significantly lower. The idea really is to try to assess, hey, can I create a viable product? Because the biggest problem ends up being that if you cannot create a viable product, then you might not be able to build a long-term business.
Sure.
So, frankly speaking, we've done folks who are going to study film in New York Institute, right? But really, the idea is, okay, given this information, what are the changes I need to make in the product?
Okay.
Right, and that also has a bearing on the cost of education. So the cost of education for one course might be different, and that would have an impact saying, hey, even though the employability might be lower, but the cost is so low, let's say theoretically, that it makes more sense to invest in this program rather than something else.
Okay. Just walk us through your main product, because I think that you do a lot of things. That you're also a platform for people to get loans from other. So, if for our listeners, if you could just walk us through your main products, what is your main target? Okay, and just a rough idea about your size now, whether it's number of loans or loan book size, whatever you think is appropriate.
Sure. So we are, as I said at the outset, we are an education financing marketplace. So what I mean by that is we work in a marketplace. We do have an NBFC of our own, when we will do loans on our own, but our core focus is finding the right product for the customer. What I mean by that is, if we think that, let's say, a loan from an SBI is the best option for you, we'd want to help you get a loan from SBI. Versus, let's say, if we feel that the loan from Avance is possibly the best option for you, we'll help you that. So for us, the marketplace is the core product. Now, obviously, there are other tools as a marketplace. We also help you in your entire higher education journey. So we even have tie-ups on admission counseling, visas, Forex, and so on and so forth. But the core focus is education finance. And within that, I said the segment wherein we operated in the last 5+ years has been the study abroad segment.
Study abroad, okay.
Yes. In the last 1 year, we have actually started the domestic vertical, specifically the upskilling segment. And that's the other big segment that we are now focusing on. But yeah, at a very basic level, it's the market.
And size, just an approximate idea in.
Sure. So, well, technically, as a marketplace, I wouldn't say we have a loan book, right? I mean, there will be a loan book, but we have now crossed 1,000 crores in loans through our marketplace in the last 5 years. And this is, when I talk about 1,000 crores, this is 1,000 crores in loans.
Sure.
In terms of applications, probably it's closer to 1 lakh.
Okay. And you mentioned you specialize in study abroad. Any breakup out there? Like you specialize in masters, MBA, undergrad, anything out there? Or you service the entire thing? Or
so we service the entire spectrum. The new products that we are developing or we are launching in partnership with few lenders and on our own are at this point in time geared more towards masters and MBA. But the undergrad products are also being developed. So at this point in time, what is live on our platform are specific unique products to GyanDhan in the MS and the MBA space. But the intent is to roll similar products in the undergrad space.
I have to ask now, okay, because maybe some of my listeners out here are kids who actually want to know what are the hot areas of study, what are the hot colleges. Could you give us some trends out here for people, because this is a top question on even a lot of, on a lot of parents' minds also. What are people doing? So just some color on that.
So I tend to refrain from this because my answer to that,
do you actually get this question very often?
Oh yeah, we get this question very, very often. I mean, to be honest, as I said, we have a marketplace where we also help students with admission counseling. I mean, you'd be surprised when we used to go out there, kind of creating awareness about the education loan products. Pretty much every student used to say that, hey, no, you help me get an admission into a school, and you tell me which is the best school, which is the best stream. So I think at a very high level, I tend to say that, I mean, even if, let's say, basketball might be the best place to be, I mean, if I don't have the skill set and I don't have the requisite capabilities, then it might not really be the best place to be. NBA might not be the best place to be here, right? I mean, a Messi might not be the best person to be in the NBA. He's better suited for La Liga. Right. So similarly, I think it really depends on the individual's skill set and their own preferences. But yes, as expected, right now, obviously, data science, anything to do with AI, tech, computer science is obviously hot. I mean, a lot of students are actually going for the programs in this specializations in these fields. That's what we see. Of late, MIMs have also been very interesting because typically what used to happen is historically, it used to be either a master's or an MBA. An MBA would require a kind of a significant amount of work experience before you would go for an MBA abroad. Now, MIMs pretty much bypass that product because what happens is it's masters in management. So you do your undergrad from India and then probably either directly or work a couple of years, and it's effectively a master's in management degree. It's not really an MBA degree, but it's
what is that? Hold on, sorry, I'm lost in this. What is that? Is that masters in information management?
So it's masters in management. So you can think of it as it could be a techno management kind of a job, a management kind of a education, right? So it's a hybrid, and because obviously the cost is much lower, the requirement on the work experience side is much lower. So there are students who would be interested in that.
Okay, last couple of questions. Now, one is just an outlook on the future. Where do you see the education loan industry in India? Where do you see it evolving? Do you think it's we can get closer to Western standards? Because in the West, loans for your undergrad, loans for your MBA are very, very normal. I mean, that's how you fund it because education costs in the US are prohibitively high. I mean, they'll obviously be much higher in India also. So that is a very well developed loan market. Where do you think India is? Where do you think they are going?
Sure. So actually, I mean, if you look at the US markets, education student loans is the second biggest asset class.
Wow. What after credit cards?
After home loans.
Oh yeah, obviously home. How could I forget home loans?
It's because
second largest after home loans.
Yes.
I had no idea. Okay, go on.
And there are issues, the fundamental issues with the US market as well in terms of the delinquencies in the student loan market, but that's a separate topic. I think coming back to it, what we see is typically in developed countries, what we see is, or in other economies, we see roughly 40% of the total cost of education will be funded by credit. And this I'm talking about at an aggregate level. Obviously, there will be people who take almost all the entire cost of education will be through credit, but at an average, 40% of the total cost of education comes through credit. In India, our overall education loan industry is currently at close to $10 billion. Our total spend on education on an annual basis is close to $40 billion. So, I mean, we are not even on day zero here. There is a long way to go for us. The good thing is there are companies who are now looking at it, and there are people who are trying different models in the space. So I think there is still a lot of room for growth. There's still, while some people say that this segment is heating up, my argument there is that it's not really the segment is heating up. It's just the segment is just so huge, and we've not even gotten started, that there is still probably space for 20 more companies and many more unicorns to be built in, or decacorns to be built in this space eventually. Right. So I think there's a lot of room to be done. There'll be mistakes along the way. I think in my mind, looking into the future, a couple of things that I definitely talk about a lot would be, one is linkage of this education or the cost of education to the outcome of the education. So trying to see how can universities be really on the hook for the quality of education that they impart, because education historically is one of the fewer segments wherein the pricing is completely disconnected from the quality of the product. Right. So I think that will probably happen at some stage quite seriously. And the other thing that will happen that's already happening is the disintermediation, wherein now you have all these edtech startups that are working with big universities to offer courses. So what's happening as a result of that is rather than doing an entire degree, you might be doing smaller courses at fraction of the costs. So your cost of education might not go down, but it become modularized. So the accessibility might become bigger, and you will have that whole lifelong learning experience rather than going to a university sitting there for 4 years. You might just go to a university 2 years or 1 year and then go for segments, go for top-up classes every now and then, or do top-up classes. So I think that those are the two things that will definitely play out in my mind. There'll be a bunch of universities that will get disrupted because of this, and their business models will completely go for a toss. And the last thing would really be, again, going back to the accountability part. There is this whole notion of income sharing agreements that has been in play for the last few years. How that will evolve is also something that will be that will be interesting to watch. That in the end state, I don't think education loans will be the only solution. So there will be a combination of education loans, grant funding / merit-based funding, and then this income sharing agreements that will come together to solve the whole access to financing space. But yes, I think as an economy, we should also be looking at that 40-45% total cost of education being funded by the formal sector.
Okay, excellent. Last question, Ankit. Help our listeners choose a good education loan provider. I mean, and since you do this, let's just look at the master segment then, because that seems to be your largest. Just some tips, some advice, some checklist, point 1, point 2, what are the 4-5 things that our listeners should consider when they're going to choose an education?
Sure. So I'll just give you 1-point answer. Reach out to GyanDhan and we'll figure out the answer for you. But yeah, I think the first thing I'll say is plan appropriately. I think, and I'll just give ideas based on my own experience the last 5 years. The biggest problem I see with students is they don't plan in advance. A lot of times what happens is you have this false, if you talk about the fall intake, you'll have the fall intake students going in August, September timeframe, and you'll have students coming to you in July saying, hey, I need an education loan. And while now with our partners, we have a process when we can get loans turned around, the unsecured loans without collateral turned around in 2 to 5 days, and secured loans also in a couple of weeks. The challenge is, what if you don't have a document at that point? How are you going to get that document?
What's the cycle out here? Your admission letter comes in by what? By May?
So for the fall intake, the early admissions start coming in as early as December, January. Most of the results come in by March, April. So for us, the fall cycle very the months of April, May, June, and July are the peak seasons.
That's what I would have thought. Yeah. So you've got 4 months to prepare. You're saying people should actually look at this earlier rather than later.
Yes.
Go on. Yeah, sure.
And as a matter of fact, if you plan for it appropriately, you can even targeting for schools accordingly. So the idea is there are schools where you might think that, hey, I might not be eligible because the cost of education is so high and I don't have a property. Well, because there are loans without collateral available, you can actually possibly target that university with the understanding that, hey, I can get a loan.
So you're saying that even in the application process, they should consider that they can get a loan. Why do you have to leave out these colleges?
Yes.
You should actually consider that. Very interesting. Okay.
Exactly. So that would be the first thing. Then the second thing which I mentioned about the documents part of it, because we see a lot of students who will not have the requisite documents, and by that this manifests itself more prominently in the cases where you have loans against collateral, the secured loans, wherein you might say, hey, I have the property, but then when we ask for the documents, you might not have the necessary documents, whether it be the chain deed, whether it be the registration certificate or some other document. Or let's say you might not have your co-applicant's income tax returns have not been filed. Right. So I think that document preparation has to be in order. And that is why when we consult students early in the cycle as well, we tell them that, hey, at least ensure that you have these documents in order. You might not want to start a process right now. Let's revisit the formal application maybe in April or maybe in May if you want. But you should at least be in a place where you know that, hey, all my documents are in order. That's the second thing. Third thing I'll definitely say is please ensure that the credit scores are pristine. And that applies even to your co-applicants. Don't take a loan. Don't fall into that trap of let me take this buy now pay later product to get a mobile loan, and I'll not repay that loan, or I'll probably delay that payment, because all delays will be reported to the bureau. And if a lender sees a delayed payment, they're definitely not going to take that risk of extending you an additional credit line. So I think credit scores will be very, very important. And that is something as well people are generally unaware of.
Sure.
And it can really hurt them.
Lovely. Is that it?
I think I would say that these would be the broad list for sure.
And of course, folks, if you want to reach out to Ankit, how can our listeners reach out to you, reach out to GyanDhan? I know you've got a website, you're there on social media. So anything specific out there?
No, so the people can always reach out to on our website. We actually even have a loan eligibility tool where students can not necessarily fill in the entire application. They can just get a preliminary idea of whether they are eligible or not. And then separately, they can always reach out to us on social media. They can always mail us. We have our email IDs on the website, so they can always reach out to us on our platforms.
There you go, folks. If you have any follow-up questions, hit them out to GyanDhan, hit them out to Ankit. And that is a wrap on this episode of Paisa Vaisa. My guest, Ankit Mehra, CEO, founder, GyanDhan. Ankit, thank you so much. Thank you for doing this for our listeners.
Thanks.
And now, the CRED privilege tip of the week, folks. Get your health insurance. It's a very important financial product to have for your health and well-being, and for your family's health and well-being also. So find out a good policy that's for you and get started on that. And thank you, listeners, for listening to this episode. If you're enjoying this show, please do share it with your friends, family, and people that you know. That would be really helpful for us. You can listen to this show and other interesting shows on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter and B_50 on Instagram. Thank you so much for listening to Paisa Vaisa, presented by CRED, the most rewarding credit card bill payments app, and powered by Quartr.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
IVM